Welcome to Bald Guy Money. I'm Bald Guy and welcome to my new studio. This is an impromptu, so unplanned, but very important video about the latest inflation numbers that have just come out, registering in at 9.1% in the USA. And in this video, I will help you understand what those numbers mean and why it hurts a lot more than what the government wants to actually admit. Because in the American example, and this really applies to everybody, even those outside of the United States, those numbers are cooked. And I have what I think is definitive proof that I want to show you in this video. On top of that, once we finish talking about inflation, I will be answering some questions that you've submitted, both on my Instagram and in the comments section of my videos. So please watch to the very end because there's a lot of good stuff there too. Not to waste any more time though, just remember that this is not financial advice, and please hit the like button right now if you'd like to support my channel and the growth of my channel. You've all been doing a really great job. A like right now would really help this video get up there and get more exposure. So, as I mentioned, inflation numbers are out in the US and we have hit 9.1% for the month of June. But what does that mean exactly, and how is this measured? Well, economists have an established basket of goods, kind of like the one you see here, but within that basket, it's not just food that you're buying. You also have things like housing, energy, education, electronics, and the list goes on. And every month, economists research how much people in a given country spend on this basket of goods. In this case, Americans with the 9.1%, but the method is basically the same everywhere. In your country, wherever you're watching from, will have its own inflation number. So for June, which is the month we just got data for in the United States, they will compare the cost of that basket of goods from June this year with the cost of a basket of goods from June last year, so 2021. So, for example, if your basket of goods cost $100 in June 2021, and today that basket costs $109.10, you can use the following formula. So the new cost, $109.10, minus the old cost, $100, so that gives you $9.10, and then you divide that number by the old cost, by $100, to calculate inflation. So in this example I've given, it's 9.1%. And that formula is actually very useful for calculating growth in sales or return on investment. So if you're not familiar with this formula, please take note of it now. But back to the topic at hand, because I know many of you are really feeling the effects of this inflation. Because the data shows that you must be feeling it. Take a look at this. With official inflation at 9.1%, and the average hourly wage only rising by 6.1% over the same period of time, most people around you, possibly including yourself, are finding themselves in a hole every month. And I'm sure that hole feels a lot bigger than the numbers are showing. And let me know in the comments if you agree with that statement. And the reason is because of three things I want to bring to your attention that raise major questions about the CPI, the Consumer Price Index, which calculates inflation, and how it is calculated. And here they are. So, number one is the period methodology issue. Number two is the cost of housing paradox. And number three is moving targets. And I will cover them in order, starting with the period methodology issue, which is basically this. Here's a 2-year calendar showing the period that has been used to measure the 9.1% inflation that we've been told about just today. And those months that have been used to calculate that 9.1% are highlighted in red. And that is from June 2021 to June 2022. And what the criticism says is that, sure, that's how much prices have gone up over the last year, in theory. I'll have more to say on that shortly though. But for many people who don't receive salary increases every year, especially for people who are on fixed incomes, throwing away those earlier months marked in gray only suits the government's narrative that inflation is not as high as what we observe it to be in reality. Now, what the perfect period for measuring inflation is, I can't say for certain. But this year-over-year rolling inflation calculation in an environment where inflation is white hot absolutely has to go. But that's not the worst part of it, because if you dig into the numbers, we find more issues there, not just in the timeline that they're using. Now, consider this, and this applies literally to every country in the world where interest rates are going up, and that's most countries in the world right now. The average American spends 35% of what they spend in a month on housing. It is the single largest expense for every American, and likely every Canadian, every Australian, every European, and the list goes on. Now, with mortgage rates rising on the back of higher interest rates put in by central banks in different countries, the biggest single expense for people, their housing, is going up. In fact, believe it or not, according to the 2021 census conducted in the United States, 65% of Americans currently have a mortgage on the home they're living in. And the average mortgage payment has increased roughly 42% since 2021. So that means if Americans spend 35% of what they spend in a month on housing, and the increase in cost of what they're paying for housing or for their mortgage in this example is a 42% increase, then if we multiply 35% times 42%, you can see that just from your housing expenses that you spend money on every month, you have a 14.7% increase in your expenses, in your monthly expenses, which alone is higher than the 9.1% inflation that we're getting officially from the government. And this is what I call the cost of housing paradox. And I really hope that all of you watching right now are beginning to understand exactly why I think the 9.1% inflation number that we've just seen today coming out of the United States is a lie. And no matter where you're watching this video, you have to look at the official inflation numbers critically, because most likely your country is feeding you the exact same lies that the United States government is feeding people via their official statistics and official inflation numbers. And now to the last thing on the list, and I mentioned this in my very first video, which was published 1 year and 1 week ago today. So I am celebrating the 1 year anniversary of Bald Guy Money, and to all the well-wishers out there, you are very much welcome to wish me well in the comments section to pump up the performance of this video a little bit more. But what I talked about 1 year ago was this. The CPI is calculated based on moving targets. For example, if beef becomes too expensive, they'll swap it out for chicken or for pork, which is a cheaper type of meat. And the reason they do that is because the economists and statisticians assume that they understand consumer behavior, and that naturally, as something becomes more expensive, you will swap it out for a cheaper alternative. Now, about that is, as we all know, based on our personal lives, it's not true, especially in most cases. I mean, if you like to have hamburger or steak, you're not going to be able to substitute that with a chicken breast or with a pork chop. Not in many circumstances. And while you are paying more for the same things, and you are feeling the heat of inflation, which is definitely more than 9.1% over the last 13 months, so June to June, that's 13 months in total, the government statisticians out there are cooking the numbers to make it look like everything is okay, or at least that things are not as bad as they seem. And that's all I have to say on that topic of inflation, so I hope you enjoyed that. Please let me know in the comments if you think I'm right, if you think I'm wrong. I want to know what you think about the official inflation numbers and what you think about my criticisms of the CPI. Now, moving on to viewer questions, and if you like this format as well, where I cover a topic and then move on to your questions, let me know in the comments, please. I can make this a more regular, common format that we do here on the channel. So I am going to read some of the questions now and just answer them freestyle. So the first question I received is from a viewer named Chris, and he asks, I am trying to decide what to put my money towards, silver or gold. The silver to gold ratio is very appealing and shows silver is a good buy versus gold. However, the dollar to gold ratio is desirable as well. My time horizon is over 3 years. What do you think? So thank you very much, Chris, for your question. And although I can't give you advice, I can tell you what I am doing personally in my own life, and you can take that for what it's worth. So over the next 3 years, I do think silver has a bigger upside price-wise versus gold. And I've covered that in a few videos. You can go back and watch that. So basically, if you're asking my opinion on what I think has the bigger upside price-wise and where I would put my money to get more returns over the next 3 years, my answer is definitively silver. That said, I have made a lot of silver purchases earlier in the year when we broke the $21 mark. And although I still plan on making some more purchases closer to the end of the year, and we are talking about silver bars, which I am buying right now, and I am looking out for the price of about $17 per ounce before I start buying more silver, I do see gold as being very attractive right now, below the $1,750 mark. So that said, my next purchase is going to be gold, because I don't think that we're going to be for too long under that $1,750 mark, especially as the US dollar starts to lose a little bit of relative strength versus other foreign currencies. And I think you'll see the dollar price of gold come up as a result, likely by the end of the year, coming back to around the $2,000 mark. Okay, so I hope you like my answer. Now to the next question. And this one comes from M.O. Silver or Mo Silver. And what Mo Silver asks is, I would like your take on the JP Morgan Citibank gold derivatives story that came out this week. What does it truly mean? I think it means paper trading, but will this news affect the physical market at all? So thanks, M.O. Silver, for your question. And at first, I didn't exactly understand what you were talking about, but I did see a reply to your question in the comment section under the video where you commented. And I understand now that what you're talking about is spoofing. And there is a big case right now going on against some prominent JP Morgan precious metals traders about spoofing. So just as a reminder to all of my viewers about what spoofing is and why this is important, let's take a look. Spoofing is the act of creating fake buying or selling orders in large amounts to create the illusion that the price of something is going to go up or down. Spoofing has been illegal since 2010, and it is done with the intent of making your actual trades that you place pay off by creating these illusions that things are going to go either up or down to get more people to follow you into the trade. So what I want to say on this topic is that although some people and some entities, so even some banks, are being brought to justice over their practices of spoofing on the precious metals markets, I'm not very optimistic that this is going to bring any immediate results to the fact that there is continued manipulation happening in the precious metal market. And this is the reason why, because to be honest, it's a very slow process, first of all, in prosecuting these people. And the second of all, it's very difficult to prove. And I actually covered that in my silver manipulation video of exactly why it is so hard to prove that these entities are participating in spoofing of precious metals. That said, back in 2019, JP Morgan did pay a $920 million fine for some of their spoofing practices. Now, I have to assume that if they paid a $920 million fine and the practices have continued, you have to imagine that the profits that they're making as a result of the spoofing are much larger than any potential fines they may have to pay. Therefore, as I said, I don't think manipulation in the precious metals market is going to end anytime soon. That said, I do think this is a step in the right direction. So thanks again for your question. Moving on to the next one. And this one comes from David. He says, more inflation and interest rate hikes are expected in Europe and the US. How will it impact crypto and real estate? So I really like this question. Thank you very much, David, for asking. And I will start from the crypto angle. So crypto, it has been under a lot of stress and in a lot of pain over the last 70 days. That said, my conviction with respect to where the space is going 5, 10, 15 years from now is just as strong as it was 1 year ago when I started this channel, because when you have something that's new, just like in the days of the early days of the internet, when you had the dot-com boom, you are going to have a lot of imposters, impersonators, and bad actors in the environment that are trying to make a quick buck. And right now it seems that we're in a place in time right now where a lot of these things are starting to die off. And I think Terra Luna, which actually caused the first major downturn in the crypto market, it was the first casualty of that. And now we're starting to see that break out into some of the exchanges. So you've had Celsius, which basically it's moving towards insolvency. You've had Voyager, which has publicly filed for bankruptcy. So you're starting to see this kind of cleaning of the crypto environment. Now, you asked about interest rate hikes and how this is going to inflation, and how this is going to affect crypto moving forward. Well, I think in the short term, we can expect a little bit more pain. Probably and most likely until still the end of the year before we start to come out of it and things start to stabilize. And that's where I think there. That said, I think inflation and these higher levels of inflation are with us to stay. And as a result of that, the fact that there are only ever will be 21 million Bitcoins in existence, I think that is a major benefit for that asset class. And that is why, again, people are calling it digital gold. So I am very optimistic. If you have, like our earlier question, the person who asked the question, a 3 to 5 year time horizon on your investment, I think holding Bitcoin is absolutely great. That's what I'm doing. I'm not giving advice to you, but again, that is what I'm doing personally. And if you are watching this video and you don't like Bitcoin, please save me the negative comments on Bitcoin. You can give me your reasons maybe why you don't like it, but that is my personal opinion and I stick by it. Now, on the topic of real estate, I think this one is actually a little more straightforward. The fact of the matter is the interest rate hikes are going to lead to a decreased demand in real estate, and we're already seeing that now. Prices are starting to come down, and it looks like, we've already reached top on real estate prices, probably back in January or February. So I do expect real estate to pull back on average, depending on where you live. I would say, let's say in the first world, we're talking about a 10% pullback in the price of real estate as a whole. That said, if you're living in a hot market, a place like Austin, Texas, if you're living in a European capital city like Paris, Warsaw, Amsterdam, if you're living in Australia, in one of the big major cities, I think that you can expect the price of real estate to pull back even more so. And we're talking about 25, even to as much as 30%. And I'll tell you exactly why. I have a cousin who works in real estate in Canada, and the Canadian market was super hot. Hotter than, in fact, any other G7 real estate market. So he told me, this was about 2 weeks ago, he sent me a message and he said, during the peak, so for the last 2 years, he had been selling 6 to 8 homes every month. You can imagine how much money he was probably making. But he told me when he wrote to me, he said, in the last 6 weeks, I haven't sold a thing. and prices are already starting to come down significantly. He added that a lot of people who were buying houses at the top are already underwater on their mortgages, which means that the value of their house is actually less than what the amount of money they actually borrowed to buy it was. So that's what it means to be underwater. So I do expect a correction in the housing market. Do I expect something as severe as what we experienced in 2007, 2008, 2009? No, I do not. That said, I think you'll find people in bigger cities, so the hotter markets will be affected more than people who are in more rural areas. And that's my take. Thank you again for joining me for this video. I do hope you enjoyed it. If so, don't forget to hit the like button right now. With that said, take care of yourselves, take care of the people around you, everybody, and I do hope to see you in the next video. Bye.